Hi, my name is Justin Weinraub with eminidaytrader.com, and in this brief video I'm going to talk about why most traders and most trading systems tend to fail. And at eMini Day Trader, we're very different than most of the trading education services that you might be familiar with. And one of the key differences is that we frame the market through what is called auction theory. And so in this video, I want to talk about and answer two main questions. Number one, what is the auction process? So give a little bit of background. And number two, how is a failure to understand that process one of the main reasons traders and trading systems tend to fail? Another key difference at eMini Day Trader is that we don't use traditional technical indicators. We feel just that they're by definition lagging, and they simply tell you what just happened. Instead, we focus on a real-time understanding of the auction process. So what is the auction process? I'll just do a brief recap here. There's a lot more information on our site, but essentially the auction process is the market's price discovery mechanism. It's how all markets function. In other words, all markets are an auction. It doesn't matter if we're talking about the stock market, the futures market, the real estate market, an art auction, or the price of milk at a supermarket. This is how all markets work. And so obviously an understanding of that process and an ability to read the auction process in real time is a huge benefit in your day-to-day trading. So let me give you a quick and very simplistic example, something we're all familiar with, to demonstrate the auction process. Let's say you're trying to sell your car. What are you going to do, assuming you don't want to sell it to a dealer? You want to sell it privately. You'll probably place an ad in the newspaper or online. And if you don't sell your car, and assuming you want to sell it pretty quickly, what are you going to do? Obviously, you're going to lower your price. If you lower your price, you're going to find a buyer. And so lower prices are essentially advertisements for buyers. And conversely, let's say that you see an ad where someone wants to buy the type of car that you own. So at the price that they're offering, you're not interested. However, let's say they keep offering to raise the price. At some point, when the price gets high enough, you'll probably sell. So in other words, higher prices are advertisements for sellers. Now granted, that's a very simplistic example, but theory is what's important, and it's this same exact process that's occurring all of the time in the financial markets. However, unlike if you were selling a car, which can take several days, or if you were selling a house, which can take months or years, the auction process in the markets, especially in the electronic futures markets, is happening literally thousands of times per minute. So this same process where the auction process where prices fall to attract buyers, prices rise to attract sellers, that's going on thousands of times per minute. And so it's highly accelerated. And obviously the benefit to understanding this market logic, understanding this process, which we teach in our software, custom software helps you do in real time, is that it allows you to stay in flow with the market beautifully in real time no matter what the market's doing. So that leads to the obvious next question, which is how is a failure to understand this auction process one of the main reasons traders and trading systems tend to fail? And to answer that, let's briefly discuss the various phases of the auction. So the market on any time frame, whether you're looking at a monthly chart or a weekly chart or a daily chart or an hourly chart or a 1 minute chart or a 10-second chart, it doesn't matter the time frame, there are repeatable phases. The market will be in balance or in the horizontal condition until something changes and we break out into a trending or vertical type condition, and at some point that vertical is going to come to an end and find balance again. And this process repeats itself over and over and over on every time frame, any time frame. And so the market's continually exploring price levels, trying to find balance. Now here is a theoretical sketch of this process where we have a market in balance or in the horizontal condition, you might say consolidating, where market participants in mass have agreed on a fair price level. And then something changes. It could be a news event, could be anything. And that balance is broken and the market breaks out vertically until at some point, typically the vertical overextends itself, capitulates, and then we refine balance. That will last for a period of time until something else in the market changes. The market breaks out vertically. Again, that'll come to an end. We'll find balance until the market breaks out vertically. That'll come to an end. We'll find balance, and this process repeats itself over and over, time and time again. So before getting to the solution, let's backtrack just one step and let's think about how most people trade. Most people, when they first learn to trade, are taught follow the trend, and that's good advice, definitely. But what happens is that you have a trend following, or you're buying or selling pullbacks, or you're having some kind of a momentum strategy. Again, it works great in the vertical condition, but when the market's not in the vertical, when it's in the horizontal condition or the end of vertical condition, you end up getting killed. And so some people then, outsmart that idea, and they find a stat somewhere that says, well, the market's only in the vertical or trending condition 25-30% of the time. The majority of the time, the market's consolidating. So they say, okay, I'm going to outsmart that, become a counter trend trader. Again, counter trend trading works great when the market's in a consolidation or horizontal phase, but when the market does go into that vertical phase, you end up getting your head chopped off. And so what does this lead to? It leads to inconsistency, really. So you do great when the auction phase happens to line up, or when it happens to match up with your strategy. So if you have a momentum system and the market's in a vertical condition, you do great. But when it doesn't, that leads to trouble. Obviously, inconsistency, losing trades, loss of confidence. Obviously, most traders, if they've been in the game long enough, have probably had some kind of emotionally charged bad scenario where you have 2-3 losers in a row. Maybe you start chasing, which leads to a huge losing day. Maybe you become scared to pull the trigger. Whatever the case may be, it leads to a lack of confidence. And so if we take this analysis of losing trader habits one step further, let's compare the thought process between the typical losing trader and what we believe. So the problem is that the thought process of most traders is solely about trade entry technique. So in other words, step one, you enter a trade. Step two, you just hope for the best. And I know this is certainly how I traded before I met Dave. I would spend countless hours trying to develop my one perfect strategy, my one perfect entry technique that I could just depend on to print money for myself. And again, it would work great some of the time. Other times, I'd get into a trade and it would seem like the market would turn at that exact moment. And I figured, there had to be a better way. There was something I wasn't seeing, something I didn't know. And what I needed to do was make a subtle but very powerful shift, and I needed more knowledge. And so the way that E-mini day trader is different from most trading strategies is that our first priority is that we put the market in context. And don't get me wrong, we do care a great deal about high probability trade setups, and we'll talk about that. But our first priority is putting the market in context. So we want to try to figure out what's the path of least resistance, both long-term, short-term. Are there any key barriers that we don't want to trade right into, or are there any key barriers that we could use for added support or resistance on a given trade? We also want to find out, or want to determine, which phase of the auction are we in. Are we in the vertical? Are we at the end of vertical? Are we in the horizontal? And our software helps you do that in real time. And so that's priority one, put the market in context. Then, and only then, do we focus on priority two, which is to enter a trade in line with our market bias, and more specifically to enter a trade that is specifically designed to take advantage of whatever auction phase we're in. Okay? So that's a very key point, because if the market's in a vertical phase, we want to use what we call our go-with type of trades. They're momentum and trend-based trades. If the market's at the end of vertical or capitulation, we want to try to catch reversal trades, reversal and counter trend type trades. If the market's in balance or horizontal, we want to try to take the fade trades. And so we have trade setups specifically designed for each phase of the auction. So we're not just stuck to making money. Let's just say if we're a momentum trader, we're not just stuck to making money when the market is breaking out in a vertical phase. We make money when the market's in a vertical phase, but when it's not, we're not relegated to losing money. And that's a very, very important and subtle shift, but it's very important. So the final and very important points here, again, it's somewhat of a subtle difference, but the ramifications to your trading can be huge. And that is first focusing on market context, and then, and only then, do we focus on trade entry. And again, the ramifications of that are huge, because your understanding, your trading confidence will greatly improve. And another really important point is that learning how to put the market in context is a skill, and it's a very lucrative skill. It doesn't do you a ton of good to just follow along blindly with some system. You want to learn how to make sense of the market. So if you learn that skill, really you're set for life. It's kind of the old fish story. Teach a man to fish, he fishes for a lifetime. Teach a man, or give a man a fish, he fishes. He eats for the day. I kind of butchered that, but you get my point. And that's our philosophy. We want to help you learn to fish, so to speak. So I hope you found some value in this presentation, and I really thank you for your time. Please contact us at our website or ask us any questions via email or phone. Again, thank you very much.